Good morning. Today we are joined with Barry Gilbert, CPA. He's a former FTB auditor, and we really want to get some insights into how the Franchise Tax Board works and how they work with taxpayers. So this is really about giving our audience kind of an insider's view of the Franchise Tax Board and a few concerns or things to worry about. So Barry, thank you for joining me today. I wanted to start a little bit, if you can explain, why you became an accountant and give us some guidance on it.
Oh, hi, Lee. Thank you very much for having me. I appreciate it. I enjoy being an accountant. I love helping people, and that's why I went to work for the Franchise Tax Board in the first place. I stayed there for 30 years. I enjoy the public service, and I like working with numbers and helping people.
Well, that would obviously, if you like working with numbers, then it would be a good industry to be in. So what led you then to a career in the Franchise Tax Board? And then I guess a follow-up question to that would be, what made you decide to get into private practice?
I've always been curious about taxes, and since I started working, and I thought that this would be a good fit for me, being that I like numbers and like to help people, and I was interested in taxes. And I stayed with the Franchise Tax Board. I worked there for 30 years, and I went from collections to audit, where I spent most of my years as a tax auditor. And my last 5 years with the Franchise Tax Board, I was in the public affairs office. I was a public affairs spokesperson in Southern California.
That's great insight. So let's start here for our audience and kind of give a difference between what is it like between an IRS action versus a Franchise Tax Board. I mean, we hear you should be very afraid of California, but just give California taxpayers a general understanding of what are the main differences of how they operate.
Well, a Franchise Tax Board in some cases can be just as difficult to deal with as the Internal Revenue Service. And in many cases, Franchise Tax Board, while they handle the same issues, income tax and franchise tax for businesses, they are quicker sometimes in getting to you and getting to the taxpayer. They're very automated as far as their collection activities. They specialize in certain audit areas that are different than the IRS, such as resident and non-resident audits. And they have jurisdiction over LLCs, which the IRS doesn't recognize the LLC, so it's a state issue. And also with corporations, there's differences. There's nonconformity between federal in California in many tax areas, and so that creates some issues for California.
All right, great. So we've heard a lot in the media lately about the different IRS phone scams and all the identity theft and the different fraud. Is the Franchise Tax Board experiencing some of the same issues right now?
I think the Franchise Tax Board does have similar identity theft issues as what's going on with the IRS. And the first thing for most people to know, most taxpayers to know, is that both the IRS and the Franchise Tax Board will contact you by mail via correspondence for any collection or audit issues. If you get phone calls out of the blue from Franchise Tax Board or IRS, or emails out of the blue claiming they're from IRS or Franchise Tax Board, normally 99.9% of the time that's not the case. It's not legitimate contact. It's identity theft. It's phishing schemes. They're trying to collect money illegally, and people should be aware of it, that these scams are going on.
Okay, so you kind of alluded to this. So how does the Franchise Tax Board start the collection procedure?
Again, the Franchise Tax Board is pretty quick on collections, and they'll notify you by correspondence. I think the first thing to recognize, at least for individuals, is that when they get a notice from the Franchise Tax Board, that they should see if it's for income tax or it's for other collection activities, because the Franchise Tax Board is a collector for various state agencies and courts and delinquent child support in the state of California. So verify what the collection notice is for.
Okay. So when you work with a client and their tax problems, what is your approach to walking them through the process? How do you make them feel better about it, and kind of make their mind at ease? It's obviously a very stressful experience when you receive a notice from, the IRS or the FTB, but just give me an idea of how you work with your clients.
Well, as a CPA and an enrolled agent also, we try and simplify it. We try to clarify the notices, and we try to of course, calm the clients down. Nobody likes to get a notice from the government, whether it's from the IRS or the Franchise Tax Board. And so we try and concentrate on the issues, clarify the issues, get the documentation in order to satisfy or answer the request from the IRS. Sometimes IRS or Franchise Tax Board have matching programs where there are things missing that the IRS or Franchise Tax Board have information on you as far as income and expenses, and they just want clarification as to why or why not they were put on the tax return.
Okay, so that's some good insight. Another question that comes up often is, how does the Franchise Tax Board work with taxpayers from out of state? So we know that there's times where they may identify income that they believe California tax should be paid, and obviously the person out of state doesn't think that's the case. But how does the Franchise Tax Board work with taxpayers from other jurisdictions or out of state?
Well, I mean, California has their tax law, which allows them actually to, pursue people in other states if they owe money. But more importantly, to see what the issue is when they are contacted out of state. California taxes individuals on all income from all sources. That's California residents. California non-residents are taxed on California source income. So if a taxpayer is living out of state and say the Franchise Tax Board contacts them, they want to know if this is a California source income, and if it is, why isn't the taxpayer, why isn't that person reporting it to the state of California?
Okay. And then from there, I would say, do most people hire a professional like yourself to assist them with an out-of-state issue if California comes after you? Or, what would be your advice there? Because it sounds like, not everyone, if someone is in whatever state, they're professional they might be working with now, they may not have the same experience with the unique California laws.
Well, and that's the thing. There are so many differences in the California laws. California is not 100% conformity to federal law. And so, yes, oftentimes, even with corporations that are out of state, not only individuals, but corporations, and they're operating within California, they probably should get some professional advice as to whether there is a filing requirement with the state of California, with the Franchise Tax Board, whether they have to register their corporation here. Same is true on LLCs, which California has a special form, a 568 form, where they monitor LLCs operating within California, and you would register, with the Secretary of State if you're an out-of-state company doing business in California, or you do have a California LLC or California corporation. Here's one difference with S corporations. For federal tax purposes, S corporations don't pay any tax. For California, there is a minimum tax, of course, a minimum franchise tax that they pay every year, but also there is a small percentage tax that they do pay on net income to the state of California. And often corporations have a problem. People start corporations, whether it's within California or outside of California, and they let them go. They never use them. And all of a sudden, they're getting bills from the state of California, notices that they should file returns, they should pay their $800 a year franchise tax, and all of a sudden they're suspended from operating in the state of California. And so it creates a lot of problems. Then you have to revive a suspended corporation if you want to use it again. So there's a lot of issues, and resident, non-resident for individuals is a big issue. And again, what income is taxable to California? What income is not taxable to California as a resident or non-resident? And it creates a lot of issues where you may need professional help to sort everything out, and especially somebody that has some experience in dealing with the state of California tax issues.
Thank you for that. So I'll kind of leave you with one last question, and you can answer however you'd like. But what would be the best advice you can give taxpayers facing a franchise tax board tax issue?
I would say the best advice I can give to taxpayers is don't be a tax ostrich. In other words, don't get a notice from the franchise tax board and ignore it or file it in the round basket. You've got to deal with it right away, as you would with any government agency, including the IRS. Pay attention to it, and if you feel that it's above and beyond what you can deal with, I think it's time to get a professional that can deal with California tax issues and with the franchise tax board.
Well, again, thanks, Barry, for your time today. I really appreciate your insight, and hope this video and the interview kind of gives some insight into dealing with the franchise tax board and the differences between the FTB and the IRS. But again, thank you very much.
Okay, thank you.